Welcome to PhillipCapital's weekly market watch. For the past 2 months, crude oil was largely trading between $70 and $80 a barrel. On August 3rd, crude oil prices broke out of this trading range to hit $82. Today, we have Ms. Ong Yiling, investment analyst from Phillip Futures, to talk about what might have caused its rise and the outlook for crude prices ahead. So Yiling, crude oil rallied to its highest level in 3 months above $82 a barrel on August 3rd. What prompted gains in crude oil?
Crude oil rallied alongside equities and other commodities on increased optimism regarding the economic recovery as companies reported strong corporate earnings. HSBC and BNP Paribas joined about 65% of MSCI World companies that have top analyst estimates so far in this reporting season. US manufacturing and service industries grew faster than estimated, and construction spending increased. Crude oil was also boosted by buy stops that were triggered by crude's push above $82 a barrel, fueling further gains. The weaker US dollar increased the appeal of commodities as an alternative asset as well.
Has oil fundamentals strengthened recently?
China has demonstrated a voracious appetite for crude oil. Oil demand now stands at a record high of 8.9 million barrels a day. Since the beginning of this year, Chinese oil demand is up over 1 million barrels. While China's growth may slow as authorities undertake measures to cool the economy, it is unlikely that demand for oil will stall. Also, overall US oil demand in May increased year-on-year by a solid 616,000 barrels a day. This is a 3.4% gain from last year. Gasoline, distillate, and jet fuel demand increased across the board. Despite the increase in oil demand, inventories remain elevated. The Energy Information Administration reported that the US is currently carrying 1.2 billion barrels of crude oil and refined products in commercial storage. Combined inventories are just 8 million barrels, or 0.7% short of the all-time high set in September 1990. Inventories have only been higher than the current level in 7 weeks for the last 20 years.
What is the outlook of crude oil ahead?
For the past 2 months, crude oil was largely trading between $70 and $80 a barrel. Considering that crude oil has broken out of this trading range on the upside, this has bullish implications. Should the economic recovery remain on track and oil fundamentals strengthen, crude oil has the potential to climb to $85 a barrel seen in May 2010. On a cautious note, however, the labour market still remains weak. A Reuters survey projected that the non-farm payrolls data due on Friday may show a loss of 63,000 jobs. The unemployment rate may also increase from 9.6% from 9.5% earlier. Should fears of a double-dip recession resurface, the macroeconomic pessimism will exert downward pressure on crude prices. Investors will be tempted to take profits, and the upside for crude may not materialize.
Thank you for your time, Yiling. That's all the time we have for today. Join us again next week for more market updates.